Invesco predicts Bitcoin will fall below $30,000. According to Business Insider, Invesco strategist Paul Jackson predicted that Bitcoin's price might go below the $30,000 mark. He sees a reasonable 30% likelihood of such a pessimistic scenario becoming reality. Jackson compares the cryptocurrency market's extreme excitement to the period preceding the Great Depression. The widespread promotion of Bitcoin is reminiscent of stockbrokers' activities in the run-up to the 1929 crisis. At press time, the largest cryptocurrency was trading just above the $42,000 mark on key spot exchanges. The U.S. Federal Reserve's hawkish tilt is one of the primary obstacles for Bitcoin at the moment. The central bank is likely to increase interest rates 3 times this year, putting downward pressure on risk assets such as stocks and cryptocurrencies. On a more technical level, the largest cryptocurrency created a death cross recently. The dreaded chart pattern, which is said to portend a severe correction, is frequently a lagging trader, with some traders viewing it as a buying opportunity. Despite some gloomy storylines, bullish price predictions abound. For example, Tom Lee of Fundstrat expects that Bitcoin might surpass $200,000 this year. The cryptocurrency's hash rate continues to climb to new highs, indicating that miners are increasing their investment in the network. According to Max Kaiser, this might push Bitcoin up to $220,000 this year. While cryptocurrency is gaining popularity among Australians, the majority are still in it for the novelty. While more Australians are trading cryptocurrencies, the majority still view it as a very dangerous investment, which is why they dabble. Despite stories of early adopters amassing riches through cryptocurrency trading, the majority of Australians who invest in the digital currency do so for the sake of entertainment. According to a survey conducted late last year by consumer group Choosy, about 1 in 10 Australians are currently dabbling in Bitcoin. However, the majority stated that they did it for joy and excitement. Boredom from COVID may possibly have had a role, as 60% of Australians who trade cryptocurrency did so within the last year. It is also significantly more popular among younger generations than it is among older generations, and males are 3 times as likely as females to be previously invested. According to the report, 19% of Gen Y are involved, compared to 6% of Gen X and 4% of baby boomers. In general, 60% of Australians believe cryptocurrency is a highly dangerous investment, while 51% believe there is a lack of transparency and regulatory responsibility. Others are more concerned with the prospective benefits, with 46% saying their investments offer long-term growth chances and 32% citing short-term profits. Additionally, privacy of transactions, 21%, and faith in crypto over traditional financial assets, 16%, were prominent reasons. Meanwhile, those of us who are still unfamiliar with cryptocurrencies are not alone, even among those who have invested money in it. Approximately 38% of cryptocurrency investors claim to having little or no understanding of how it all works. It is troubling that many investors do not completely understand the investments they are making and lack the risk tolerance necessary to invest in such turbulent markets, said Whiteley Bradford, a financial literacy specialist at Griffith University. Cryptocurrency is a highly speculative asset class, and investors should perform their own research and seek professional advice before investing. The editors of Wikipedia refuse to classify NFTs as art. NFTs are reshaping the art world, allowing many artists to explore a new level of art making. As artworks, NFTs have found their way to the world's most prestigious auction houses, where they have broken sales records. However, NFTs have been a source of contention, with even the editors of Wikipedia, the world's largest online encyclopedia, debating whether non-fungible tokens qualify as art. The Wikipedia dispute began when editors began evaluating the list of the most expensive living artists' works, which included digital artist Beeple's NFTs but omitted another popular artist and NFT vendor Pak. Beeple and Pak have both successfully sold non-fungible tokens, and their artworks are featured on a list of the most valuable non-fungible tokens. I see that Pak's merge has been removed, but Beeple's everyday sale has been retained. Shouldn't that also be removed from this list? Additionally, this is an NFT sale, therefore, if merge does not qualify, should Beeple? Additionally, the Beeple art is composed of numerous pieces and is not a singular work, as a Koons sculpture is. Although it is a collection of works, sold as a whole, does that constitute it a single work of art? If we include Beeple's everydays on this list, other NFT works become eligible, one editor suggested. Generally, it is not about Wikipedia editors or individual contributors defining what is or is not art, but rather about consensus from third-party sources, another editor remarked. The crypto community is outraged by Wikipedia's decision to exclude NFTs from art, with several tweets urging the NFT community to rally and inform the Wikipedia editors that NFTs are, in fact, art. On the other hand, NFTs are a general-purpose media. Some NFTs are works of art, while others are not. It is currently unclear whether or not NFTs will be classified as art on Wikipedia. However, the outcome is crucial, as Wikipedia is the primary source of information on the planet. How are NFTs used for money laundering and wash trading? NFTs are divisive for a variety of reasons. Their connections to money laundering are another issue, but this is just like regular art, isn't it? Non-fungible tokens, NFTs, are a common topic of discussion in the news. Someone will make millions one day by selling digital art as an NFT. The following day, a would-be NFT startup rug pulled its investors, seizing their whole investment. Without a doubt, NFTs are contentious. One charge leveled against NFTs is their alleged involvement in money laundering. NFTs make it easier than ever to clean money from a criminal enterprise, assisting criminal groups worldwide in cleaning up their ill-gotten assets. So how are NFTs used to launder money? What is a NFT? According to our NFT explainer, an NFT is a unique digital asset that cannot be divided into smaller pieces, unlike a digital or cryptocurrency, but has an indelible and traceable history, like the majority of digital or cryptocurrencies. You can use an NFT to represent virtually any type of digital item, but they are most frequently associated with digital artworks. Once generated, the NFT owner may sell their one-of-a-kind token via an NFT marketplace, establishing their own price in the hope that someone will purchase it. The majority of transactions are conducted in cryptocurrencies, while there are few exceptions, such as Beeple's Everydays, the first 5,000 Days NFT, which sold for an astounding $69.3 million at Christie's first-ever digital art auction. Are NFTs used for money laundering? It's difficult to see how non-fiduciary trusts are not exploited for money laundering. All of the moving elements are there to simplify the process of processing and cleaning money. NFTs and Bitcoin trading provide a convenient layer of abstraction for criminals, are exceedingly easy to use, practically free at the point of service, and incorporate several privacy protections. So how are NFTs used to launder money? The criminal organization builds a one-of-a-kind NFT and advertises it on an online marketplace for NFTs. The criminal organization acquires its own NFT through the NFT marketplace, assuming an alias that conceals its connection to itself. There are a few additional moving components to the process, but they are few and far between, and that is the broad strokes of how NFT money laundering works. A company that uses NFTs to clean money is likely to use a wide network of cryptocurrency wallets and may even attempt to route the proceeds through a cryptocurrency exchange to add another layer of security, where the crypto will be swapped out for fiat currency. After the NFT has been traded a few times, the corresponding coin is considered clean. Additionally, while blockchain technology makes identifying the original selling wallet trivial, determining who truly controls the wallet is a whole different story. Because not all NFT markets adhere to Know Your Customer, KYC, and anti-money laundering, AML, requirements, anyone can register an account, make a sale, and keep their identity disguised. At other cases, criminals may use stolen accounts for major NFT markets to lend further credibility to a transaction by breaking into an account, make the deal, and then vanish. Certain individuals employ the same procedure to artificially raise NFT prices. Each transaction between linked accounts presents a potential to boost the sales value, so driving prices higher than they should be. Wash trading, as this technique is referred as, is another type of NFT manipulation that is linked to money laundering and other types of NFT fraud. Is it illegal to use NFT for money laundering or wash trading? Absolutely. Simply because we're discussing Bitcoin assets does not mean that conventional financial regulations do not apply. Laundering the proceeds of crime in any manner is unlawful, as is wash trading in order to artificially boost the price of a product. The trouble is that with cryptocurrency and NFTs, it is much easier to conceal the paper trail. Money laundering is not exclusive to the NFT. It is critical to understand that NFT money laundering is not a cryptocurrency-specific problem. Although NFTs have simplified the process of money laundering, criminals have historically utilized rare or valuable artwork and other rare artifacts to conceal funds and conduct unlawful activities. Swapping high-value objects is a reasonably straightforward method of transferring money between entities, made much better if the object's value can be adjusted to your liking, as with NFTs. Additionally, given the staggering volume of NFT transactions that occur daily, the notion that the majority of NFT trading is used to facilitate illicit activity is a stretch. OpenSea, the leading NFT marketplace, has officially surpassed 1 million registered users. It is difficult to calculate the likelihood that the majority of these users are registered to assist with money laundering or other NFT-related fraud. Alternatively, consider art forgery. Similarly to how forgery occurs in the world of art, it too occurs in the realm of NFT art. Indeed, the process of forging NFT art is exceedingly simple, as the majority of digital art can be copied with a few mouse clicks. Once saved to a computer, the stolen digital artwork is uploaded to and sold as an original on an NFT marketplace. Unfortunately, persons who have their digital artwork stolen and sold as an NFT have limited recourse. While digital art-related social media sites such as DeviantArt make an effort to track photographs published by its users, it is a time-consuming operation. On that front, DeviantArt protects searches millions of fresh NFT images each week across many NFT marketplaces and has notified its users of over 80,000 instances of stolen artwork. Nevertheless, the issue persists, and DeviantArt is a drop in the ocean of freely accessible digital art. Money laundering and NFT go hand in hand, but can we stop them? If money laundering using NFTs is so straightforward, how can it be stopped? Really, there is no clear answer. In the real world, artists and authorities take extraordinary measures to track and secure artwork. The Art Loss Register keeps track of stolen and missing artworks worldwide and prohibits them from being sold at reputable auction houses. There has been some success in identifying cryptocurrency wallets used in earlier crypto-based heists, rendering the wallet storing the cryptocurrency unusable for currency transfers, therefore nullifying the benefits earned through theft. Certain NFT marketplaces adhere to KYC and AML regulations, while others go above and above to guarantee that each developer is fully validated. However, for every NFT marketplace that takes these measures, another handful will not, allowing anyone to create an account and sell whatever they want, at whatever price they want. NFTs are unquestionably here to stay. They are, however, likely to face more regulation as governments throughout the world strive to combat their use in money laundering, tax evasion, internet fraud, and other illicit activity. Why Ethereum may be this year's best performing cryptocurrency. Here are 3 reasons why investors should consider Ethereum, ETH, as a top cryptocurrency to purchase as the new year begins. Long-term investors seeking for the best cryptocurrency to invest in this year have plenty of options. Thousands of cryptocurrencies are available to investors, ranging from large-cap coins to smaller, high-growth initiatives. Ethereum, ETH, on the other hand, remains a popular choice for many, and with cause. Those who have been on the sidelines and are ready to risk a small amount of wealth may wish to explore Ethereum as a core holding. I'll explain. Ethereum fuels the expansion of DeFi. Ethereum's investing thesis requires a grasp of the decentralized finance DeFi movement. DeFi, in its simplest form, refers to a collection of applications and projects aimed at upending traditional banking. Whether this entails simple money transfers or the ability to purchase digital currencies, non-fungible tokens, or other commodities on a decentralized exchange, this is a significant and growing phenomenon. Ethereum, as it happens, serves as the DeFi movement's backbone. The overwhelming majority of DeFi projects are Ethereum-based. Why? Ethereum, on the other hand, was the first platform to support smart contracts. As a result, Ethereum-based projects can incorporate precise requirements that enable the creation of virtual contracts. These lay the groundwork for a large number of the advances that have become commonplace in the crypto realm. The metaverse is one of the primary initiatives that has many investors enthusiastic. Due to the fact that the majority of this activity takes place on the Ethereum blockchain, Ethereum can be considered as a wager on the growth of cryptocurrency beyond simple money transactions. Ethereum 2.0 will be released in the near future. One of the criticisms leveled towards Ethereum is that transfer speeds and costs are now quite slow and expensive. As a result, numerous investors are on the lookout for the next big thing. And, as we've seen, Ethereum murderers abound. Ethereum, on the other hand, is taking some audacious steps to refute this perspective. Indeed, Ethereum's transition to Ethereum 2.0 through a series of significant updates is a significant achievement. This transition will enable Ethereum to transition to a proof-of-stake network capable of processing a greater volume of transactions at a cheaper cost. By and large, the majority of investors are approving of this move. Having said that, Only time will tell whether this improvement is successful. In short, however, Ethereum is not risk-free. There are other competitive blockchains with smart contracts that are actually faster and less expensive to utilize. However, Ethereum's enormous ecosystem has created a sizable moat, according to many. As a result of its size and scale, many conservative long-term investors prefer Ethereum. However, the network's impending migration to Ethereum 2.0 is definitely worth considering. Many investors who have already placed bets on Ethereum point to this upgrade as a reason to continue holding this top asset in the future. Indeed, if Ethereum's update goes as planned, this is a cryptocurrency with the potential to overtake the market leader, Bitcoin, in terms of worth, possibly this year. Beyond Bitcoin, BitPay sees growth in consumer crypto payments. As merchants and customers gain familiarity with cryptocurrencies and the number of business applications grows, Bitcoin's supremacy as the preferred payment currency erodes. Almost a third of payments processed by BitPay, a crypto-focused payment processor, are made using Ether, stablecoins, and a handful of smaller, so-called altcoins. Ether currently accounts for 15% of payments made through BitPay, which offers businesses the ability to take cryptocurrencies at the point of sale, as well as a MasterCard-branded debit card that enables customers to spend a variety of cryptocurrencies at millions of retailers. Stablecoins such as Tether, or USDT, and Circle's USD Coin, or USDC, are rapidly gaining traction, accounting for 13% of BitPay payments, Bloomberg said. The remaining 3% is made up of three minor cryptocurrencies that BitPay began accepting in 2021, early Bitcoin competitor Litecoin, LTC, Tesla CEO Elon Musk's favored Dogecoin, or Doge, and its spin-off Shiba Inu, or SHIB. This is down from 92% in 2020, according to BitPay CEO Stephen Pear. He attributed some of the increase to the increasing use of stablecoins for cross-border business-to-business payments. That, however, the use of Ether, the Ethereum blockchain's cryptocurrency, has risen rapidly since 2021, when the explosion in decentralized finance, or DeFi, and new financial technologies, or NFT, initiatives boosted its profile. The majority of them are based on the Ethereum blockchain and use Ether to conduct transactions. For instance, Christie's recently auctioned a $69 million NFT collage valued in Ether. Consumption-driven. Consumer choice is what motivates the boss and their desire for an omni-channel approach to payments, BitPay COO Jim Lester recently told PIM's Karen Webster. Merchants and billers must truly meet consumers where they are, and if that is through the use of a credit card, fantastic. If the card is a debit card, that is excellent. However, if the currency is crypto, this must be factored in. Additionally, as cryptocurrency continues to grow, BitPay's COO sees an opportunity for financial institutions to lead or risk falling behind. BitPay's volume increased 57% in 2021, he claimed, with fourth quarter volumes increasing by 27% over the previous quarter. Apart from the need to attract and retain customers, retailers who accept cryptocurrencies directly profit significantly from the absence of credit card issuers' hefty transaction costs, Lester said. BitPay enables retailers to accept Bitcoin altogether or to convert it effortlessly from the cryptocurrency used by the customer to fiat currency at the point of sale. There are undeniable reductions and efficiency in terms of merchant costs, he added. Last year, PayPal extended support for Ether and Litecoin, as well as Bitcoin, BTC, and competitor Bitcoin Cash, or BCH. After allowing clients to trade the three cryptocurrencies, the payments business began accepting them as payment at its 32 million-strong merchant network. It's also worth noting how users are utilizing cryptocurrencies. Payer told Webster that BitPay experienced a significant surge in the use of cryptocurrency for luxury products such as jewelry, watches, automobiles, boats, and even gold last year, nearly tripling from 9% in 2020 to 21% last year. Use cases expanding. Stablecoin adoption is expected to continue to grow significantly in 2022 for a variety of reasons, most notably that by maintaining a one-to-one peg to the dollar, and other currencies such as the euro and pound sterling, they enable consumers and merchants to avoid the price volatility associated with cryptocurrencies such as Bitcoin and Ether, which regularly experience daily price changes of 5% to 10%. Additionally, Facebook's WhatsApp messaging program, which has more than 2 billion users, has revealed plans to employ the smaller stablecoin Paxos as an internal currency. Additional information is available at Are Paxos and Diem the New Diems? The issuer of stablecoins Facebook pilot program has just been expanded to 2 billion WhatsApp users. Concerns regarding Bitcoin and Ether's huge environmental footprint, with power consumption similar to that of small to medium-sized countries, are a significant and developing issue. Ethereum is addressing this by transitioning over the next year or two to a low-power blockchain system. Bitcoin miners are converting to more environmentally friendly energy sources. Additionally, Seek and Proof of Stake solve crypto's environmental, social, and governance (ESG) issues. Tesla briefly considered accepting Bitcoin as payment for its cars last year, but Musk later reversed his decision in response to outrage from environmentalists and ESG investors. Last week, he boosted Dogecoin, which grew from obscurity to a top 15, and occasionally top 10 cryptocurrency after Musk began promoting it on Twitter. Despite this, BitPay COO Jim Lester told Webster that the crypto payments sector is still young and expanding. However, there is sufficient market traction, he explained. As these huge merchants begin to move down this route, as the large processors begin to feel real pressure from their merchants, their enterprises, and their consumers to adopt it as a medium of exchange, the world will begin to shift in that direction. Bitcoin has dropped from its all-time high of over $68,000. What investors should do right now? On November 10, Bitcoin, the world's first and most popular cryptocurrency, hit a new all-time high of more than $68,000. Bitcoin's previous record high occurred in October, when it came dangerously close to reaching $67,000. Prior to these recent highs, Bitcoin saw numerous ups and downs since its November high, including a July plunge below $30,000. Despite the new high and continuous volatility, analysts continue to forecast that Bitcoin's price will surpass $100,000 this year. What are Bitcoin investors' responsibilities? A new record high does not imply Bitcoin's volatility is finished. In fact, experts predict it to increase. Because it is a fledgling sector, it is extremely volatile, explains Teresa Morrison, a certified financial planner with the Beckett Collective. As such, Morrison advises keeping your investment small enough that the crypto tail does not wag your financial dog. In other words, avoid investing so heavily in crypto that the currency's excessive volatility wreaks havoc on your overall portfolio. As a general guideline, experts recommend that speculative investments, Bitcoin, specialty ETFs, and alternative assets, account for less than 5% of your whole portfolio. Additionally, it is critical to never invest in Bitcoin at the expense of other financial goals, including as retirement savings or debt repayment. However, if you've already done all of these things and are wondering what to do in the aftermath of Bitcoin's newest all-time high, the answer is simple: do nothing. The future of cryptocurrency is expected to see further volatility, so long-term investors should hold on to their currencies and avoid being swayed by the hoopla around these daily fluctuations. If you believe in Bitcoin's long-term potential, simply avoid checking on it. That is the wisest course of action, Humphrey Yang, founder of Humphrey Talks, previously told Next Advisor. How blockchain technology is transforming the world. Distributed ledger technology, DLT, is a catch-all word for the technology that enables cryptography to function. How much does trust cost? We rarely consider how much we pay for trust, yet we definitely place a premium on it. Typically, this value is shown when trust is violated or lost. That is precisely what occurred in 2008, when we discovered that the people in charge of the world's financial health were asleep at the wheel. We recognized that we were paying godly quantities of money to mere mortals for supplying trust. That is why cryptocurrency is such a significant deal. We can now construct machines to deliver trust as a service for the first time in human history. We no longer have to rely on flawed humans, which increases the accessibility of trust. Distributed ledger technology, DLT, is a catch-all word for the technology that enables cryptography to function. It's a sophisticated system of incentives and penalties that incentivizes millions of anonymous computers worldwide to be trustworthy. This is why Bitcoin is not backed by an individual or a corporation. And, certainly, this is a difficult concept to grasp, but so is our current financial system. Unlike the financial system, however, DLT is significantly more transparent, which makes fraud much easier to detect. So what happens when the cost of trust is reduced? The first beneficiaries are the value creators and producers. They now suffer fewer losses as a result of layers of predatory middlemen. This is already evident in the remittance industry, where Bitcoin can be used to move hard-earned money across borders at a significantly lower cost and with more security. As a result, hard-working men and women worldwide lose less of their hard-earned money to intermediaries such as Western Union. NFTs are another excellent illustration of what happens when the cost of trust is reduced. At its core, DLT permits unambiguous ownership of digital assets such as NFTs without the use of an intermediary. Without the assistance of a trusted intermediary such as a record company, lawyer, or auction house, artists and other creatives can directly transfer ownership of their work to customers. In the case of NFTs, the traditional middlemen who verify ownership and facilitate the legal transfer of an asset are replaced by a trusted distributed ledger technology, DLT, system, such as Ethereum. As a result, creators of digital assets such as digital art, music, or video retain a greater portion of the sale earnings and can promote their work to anybody with an internet connection. When the middleman is removed and creators are given greater value, wonderful things happen. Individuals are more motivated to create than to act as middlemen. Throughout my career, I recall numerous engineers desiring to go to finance due to the significantly greater compensation. The remuneration for finance, on the other hand, is high simply because most financial professionals operate as middlemen in the transfer of assets. If we eliminate these middlemen using DLT, a greater portion of the value can go to engineers and scientists who work on tough challenges that will improve everyone's lives. This means that we may create systems that reward individuals for decreasing carbon emissions or contributing to our evolution into a multi-planetary species, systems that reward creators, not intermediaries. Throughout history, we have made numerous sacrifices in the name of trust, confidence in government, money, and religious organizations. And in the majority of cases, we've paid a tremendous price for it. Humans are fundamentally wired to trust, it is ingrained in our nature. We should not be forced to pay such a high price. I'm looking forwards to all the beautiful things we'll be able to build now that trust at scale is so much more accessible. The Indian Prime Minister urges global cryptocurrency cooperation. Prime Minister Narendra Modi of India has urged international cooperation to address the issues posed by cryptocurrencies. Modi stated electronically at the World Economic Forum's annual Davos meeting in 2022, "Cryptocurrency is an illustration of the types of problems we face as a global family in the face of a changing global order. To combat this, each nation and worldwide organization must take coordinated action." Modi compared Bitcoin to supply chain disruptions, inflation, and climate change, stating that the type of technology connected with cryptocurrency renders judgments made by a single government insufficient to address the issues posed by cryptocurrencies. We must have a shared perspective. The Indian government has not yet developed its own regulatory framework for crypto assets, but has opted to investigate existing regulatory frameworks and the evolution of global norms on cryptocurrency. The Finance Ministry has contacted the Bank for International Settlements, BIS, to assist in the formulation of its legislation. The country's proposed cryptocurrency legislation is unlikely to become law until April, when the year's budget session concludes. According to reports, the law has evolved from barring all private cryptocurrencies while allowing limited exceptions to promote the underlying technology to permitting Bitcoin to be used as an asset but prohibiting its use as currency or payment. Modi questioned whether multilateral organizations are capable of addressing contemporary difficulties during his talk. When these institutions were established, conditions were different, and they continue to be different today. That is why every democratic nation has a responsibility to place a premium on reforming these institutions in order to ensure that they are capable of addressing future modern challenges, he explained. Modi, who heads the world's second-largest country, concluded his remarks by stating that new challenges require new approaches, that every nation requires the help of other nations more than ever before, and that he is confident the conference's deliberations will show fruit. Modi delivered a virtual keynote presentation at the Sydney Dialogue, an annual meeting on emerging technology, on November 18, 2021, in which he urged democratic countries to collaborate to ensure crypto does not fall into the wrong hands and does not corrupt our kids. After suffering from a hack, Crypto.com, CRO, restricts withdrawals for all users. Crypto.com has been hacked. The cryptocurrency exchange made the announcement in the early hours of Monday following user reports of suspicious behavior on their accounts. It is the first centralized exchange to be hacked in the year 2022, following a year in which multiple hacks cost exchanges and consumers billions. Crypto.com, CRO, is compromised. Users of the Crypto.com exchange began reporting account difficulties. Subsequently, these users discovered that their accounts had been compromised and that their cryptocurrency amounts had been depleted. In some instances, the hacker made off with the whole balance of the accounts. Crypto.com addressed these concerns on Twitter. In reaction to revelations of the theft, The cryptocurrency exchange quickly stated that it would suspend withdrawals for all customers on the site while assuring them that their cash remained safe. The tweet highlighted that the hack affected just a small number of individuals. However, users of the network erupted in protest, claiming that this was not the case. The amount of complaints on social media about users losing money as a result of the attack has been steadily increasing. Most had considerable amounts of cryptocurrency stolen and pleaded with the exchange to take action against the incident. Proceed with caution. Following the hack's disclosure, Crypto.com immediately suspended all withdrawals from its platform. Users were unable to withdraw funds, and those who had pending withdrawals were unable to complete their transactions. This was done to prevent the hackers from performing any more withdrawals from the affected users' accounts. The hack is believed to have occurred when attackers discovered a technique to circumvent the exchange's two-factor authentication security procedures. This caused Crypto.com to notify users that they must reset their two-factor credentials and log back into the platform to recover access to their accounts. The cryptocurrency exchange stated that this update will be gradually rolled out to consumers. Withdrawals will thereafter be enabled, allowing users to send monies out of the exchange. While we recognize this may be inconvenient, security always comes first, the conversation stated. How to develop confidence as a cryptocurrency investor. Thus, you intend to engage in cryptocurrency trading but have certain reservations. You may have been persuaded by your closest friend's financial potential. However, something has been keeping you back for an extended period of time. Here are some helpful tips on how to build your confidence as a crypto investor using a site like Bitcoin Loophole. Determine your investment capacity. To maintain your confidence, you must first determine how much money you are willing to invest. It is the amount that you can comfortably give up if your earning opportunities continue to dwindle. You'll need to be candid about this issue in order to avoid any guilt if the worst-case scenario occurs. Simply keep in mind that you can always restart for another shot. After all, you are unlikely to be struck by lightning twice in the same area. Consider making a small initial investment. If you have reservations, you can always mitigate the effect of the odds by investing with a small amount of money. There is no sum that is too small or too large for an investor prepared to take risks in order to profit from purchasing and selling crypto coins. This is why you should avoid investing significant sums of money as a first-time investor. You could be better off starting small and gradually increasing your capital. Yes, if you only have a small amount of money in your wallet, you can always go for trial and error. Determine how long you are prepared to wait. The holding period can be perplexing. This is why you should establish limitations on the amount of time you can tolerate. This will depend on your budget, as not everyone can maintain a high level of liquidity for an extended period of time. You'll need to amass sufficient savings to meet your financial obligations without succumbing to the temptation to sell your coins. It will assist you in making the correct decision at the appropriate time. That is the point at which the selling price has surpassed the purchasing price. If you can afford to extend the holdover period, it's worthwhile to see how high the selling prices can rise. To optimize your crypto winnings, you can always wait till another record is achieved. This can be accomplished by tracking the price trend. A positive one would be beneficial to an investor wishing to sell. You'll need to keep an eye on the updates to ensure that you don't lose out on the opportunity to sell your coins at a record high price. And this moment may occur only once every 2 to 3 years, if not more frequently. Remain steadfast in the face of danger. Every crypto ecosystem will always have some level of risk. It is entirely dependent on your ability to maintain control of the situation. You can always impose risk mitigation measures, such as diversifying your crypto portfolio with a variety of crypto items. This may not be realistic for novices, but once you have sufficient funds, you may always venture there. Investing in many cryptocurrencies allows you to diversify your risk. This means that as you gain experience in crypto trading, you will need to familiarize yourself with other crypto items. Another tip is to use caution. Always keep an eye on your surroundings. This simply implies that you must monitor your account on a frequent basis to guarantee that no abnormalities exist. Once you've identified it, you'll need to file a report. Any complaints or concerns with your account must be communicated to your cryptocurrency exchange administrator. This is the only method to remedy the matter, as the developer is in a better position to determine what went wrong. Why do people invest in cryptocurrencies? Cryptocurrency is a different type of money. It is a decentralized digital currency that was launched in 2009. There are numerous ways to receive a cryptocurrency, and in the majority of situations, one must have money to deal with. Money is involved, trading requires some thought, one must have a firm grasp on what cryptocurrency is and what they are getting themselves into. However, several developers and crypto experts have argued that because Bitcoin is still in its infancy, we will not see it employed in daily life. Numerous sources of exposure contribute to cryptocurrency's popularity, including a large crypto community on Facebook, trending crypto issues on Twitter, and even celebrities investing in cryptocurrency, such as Elon Musk, who popularized Dogecoin. Bitcoin, in particular, reaching an all-time high and being accepted by legitimate financial institutions can only suggest that cryptocurrencies are gaining traction as a significant aspect of finance and technology. On a day-to-day basis. Each day, millions of transactions take place using popular platforms such as Immediate Edge, demonstrating how sending and receiving Bitcoin has become a commonplace in the modern era. Everything is going digital, and we are gradually moving towards a paperless future, including money and payment. However, because the money is still in its infancy, there will likely be difficulties with transactions. As of now, there is no simple way to purchase, transmit, or even spend cryptocurrencies. This is why developers and professionals are working to make the trading process more approachable to the general public. Its volatility would also have an effect on how cryptocurrency is spent. According to CNBC's piece, Kim Gower, a senior economist at Chain Analysis, was on a trip to Tulum, Mexico, with her boyfriend when they came upon a restaurant that accepted Bitcoins as payment. "It was not the last time I saw it, you will undoubtedly see it in other locations," she warned. Progress is still being made towards completely accepting cryptocurrencies. Developers and financial institutions are enabling us to construct a user-friendly software for trading and managing our cryptocurrency. Indeed, Bitwala, a financial technology startup, is rumored to be creating a cryptocurrency-only bank in the coming months. Account holders will receive a debit card. They may use it to purchase food, groceries, or services, and the bank will immediately convert their cryptocurrency to traditional currency, as indicated in CNBC's story. That is why the majority of people contemplate cryptocurrency trading, because it may prove beneficial in the future. There are also automated Bitcoin machines available currently, such as CoinSource. GoCoin enables merchants to visit a Bitcoin accepting location. Additionally, Purse.io enables buyers to shop using cryptocurrencies, which they may purchase directly from Amazon. A rental network in New York now accepts cryptocurrency as payment for rents and maintenance services. It was distributed throughout the country in excess of 400,000 units, and according to Chaim Lowenstein, Vice President of Business Strategy at ManageGo, 38 people have already paid using their Bitcoin. Regarding volatility. Despite the myriad possibilities of cryptocurrencies, it is critical to grasp their volatility. It is not new for us to learn that the value of a particular cryptocurrency, such as Bitcoin, Ethereum, Cardano, or any of the other thousands now in existence, can fluctuate significantly. While volatility can be viewed as a risk, it is also one of the elements investors examine, especially given that the majority of young people grew up on social media and are accustomed to fast-paced cycles and rapid gratification. Additionally, people are thrilled about the potential for cryptocurrencies to be life-changing technology. This is why, despite their volatility, the majority of people opt to invest as quickly as possible. Consider the following when investing in cryptocurrency. Nothing beats learning about Bitcoin and listening to experts. By doing so yourself, you'll have a firm handle on what you're getting yourself into. Prior to making any decision, you should thoroughly research the history and fundamentals of your selected cryptocurrency, as well as its circulation and market capitalization. Cryptocurrencies with a high value are not something you should obsess over or become fixated on. While analyzing the highs and lows of cryptocurrencies, consumers also consider their reputation and overall stability, which may prompt you to spend. Cryptocurrency trading websites to watch in 2022. It is now easier than ever to gain entry to the Bitcoin industry. With a plethora of exchanges accessible, including several that specialize particularly to Americans, such as Coinbase and Kraken, purchasing coins can be accomplished in a matter of seconds from any location with an internet connection. The question is, which trading websites will be worthwhile of your time in the coming year? This article will highlight the must-visit cryptocurrency trading websites. Gemini. The Gemini exchange is unique in that it combines new-age cryptocurrencies with established conventional currencies. Users can exchange US dollars for Bitcoins or Bitcoins for US dollars, as well as other currency pairs such as USD/BTC. Gemini supports about 20 different currency pairings, including ZEC and USD. Gemini is a one-stop store for Bitcoin investors. As George Washington would say, "Give me liberty or give me death." Clients want such firms to invest their money where it belongs on both sides of trade negotiations with 0% commissions, as long as the account balance is less than $1 million, the application fee waived. That means there are no hidden fees and transactions are instantaneous. Bitcoin Evolution. The Bitcoin Evolution app is similar to having your own personal trader in your pocket. The program enables users to profit handsomely from Bitcoin trading without having to deal with the annoyances connected with traditional investments. This establishment is accessible via the web, desktop, and mobile. It is compatible with all devices. It works best when viewed via your phone's browser or by downloading the app from your device's store. Additionally, when marketing conditions are favorable, you might earn up to $1,500 for registering on your first day. After you click the Register Now button, a member of our staff will contact you to confirm your registration. To verify new users, Bitcoin Evolution requires them to enter basic information such as their full name and phone number. Coinbase. Coinbase is one of the most widely used cryptocurrency exchanges in the United States, Europe, and other parts of the world. The company has customers in over 100 countries and is responsible for an ever-growing crypto economy that supports over 9,000 financial institutions. It's ideal for beginners and has a simple-to-use UI that works across numerous devices. The bank protects your transactions through the use of cold storage and two-factor authentication. Additionally, they use encryption to safeguard against internet threats, putting the customer's security first. Coinbase's account creation process is comparable to that of opening a new bank or brokerage account online. All of the information you give will be compared to numerous databases to determine if there are any existing records that would preclude registration, for example, if someone else already has your SSN on file. Once approved, building an identity on their site can take as little as 10 minutes, but may require phone verification depending on national requirements. BlockFi. BlockFi is a revolutionary interest-earning bank that enables you to store your cryptocurrency with compounding and no fees. Earn between 3% and 8%. What's the best part? You are not required to maintain a minimum balance or pay any hidden fees. Choose between USD, Euro, GBP, or JPY, and they'll send it monthly as soon as the next payment day arrives. No need for a lengthy waiting period. With rates as low as 4.5% and no upfront cash required, BlockFi can assist you in avoiding taxes on any earnings from the sale of crypto assets by allowing you to borrow against them. The BlockFi Visa credit card comes with a rewards program that allows you to earn Bitcoin when you make purchases. You'll have access to your funds in both traditional and cryptocurrencies, all at a 1% discount. The Ripple and XRP army is giving the SEC its most difficult court battle ever. Prominent XRP supporter at @CryptoWolf recently declared that Ripple Labs and the entire XRP army are putting up the toughest fight of their careers against the SEC, citing a recent tweet by Jake Chervinsky, policy chief of the US Blockchain Association. Ripple fights the SEC more tenaciously than Elon Musk. Nearly 2 hours ago, Chervinsky stated that regardless of how the crypto community views Ripple as a firm or XRP as a cryptocurrency, they can agree on two key points. Ripple has been fighting the SEC in court, giving the securities regulator no mercy. Several other cryptocurrency companies have previously chosen to cave and settle, including Tesla's CEO Elon Musk, the world's wealthiest person, whose e-car company recently integrated Dogecoin payments for some of its items. Earlier this year, the SEC sued a number of corporations and crypto advocates. Block.one, Kik, Stefan Chin, founder of the Virgin Capital Cryptocurrency Fund, and the late John McAfee are among the notables. As previously stated, the regulatory agency even filed a lawsuit against Elon Musk in September 2018 for tweeting "I'm considering buying Tesla for $420. Funding has been secured. According to the SEC, such statement was false and deceptive. Additionally, in August of last year, the agency threatened to sue Coinbase, the largest and only publicly traded crypto exchange in the United States, led by CEO Brian Armstrong. Coinbase was on the verge of launching a crypto financing facility based on the USDC stablecoin. The Securities and Exchange Commission threatened the corporation with a lawsuit over the securities issue. Coinbase was forced to abandon its intentions to introduce the lend feature as a result. Ripple secures a court victory. As previously reported by You Today, U.S. Magistrate Judge Sarah Netburn recently ordered the SEC to provide over a draft of the letter written by the agency's former director Hinman, in which he makes a recommendation about whether Ethereum should be classified as a security or not. Hinman argued in a 2018 lecture that Ethereum was not a security after all. The SEC is scheduled to provide the letter, as well as minutes from SEC meetings and information from unaffiliated third parties. This is the result of Ripple's legal team's recent efforts to determine why the SEC has declared Ethereum and Bitcoin to be non-security but believes that something is different with XRP. Many XRP fans view this as a significant victory for Ripple versus the SEC thus far in this legal battle. Gen Y, the true crypto trading champions. Gone are the days when elders' financial advice was considered the most powerful. Now that times have changed, it appears as though the younger generation is the most knowledgeable about online trading, mining, and investment. This internet generation outperforms Generation X in terms of investment prudence. They are the ones who understand how Bitcoin works and how to benefit from it. As a result, the older generation is compelled to seek their advice on cryptocurrency trading. And they occasionally wonder who owns the most Bitcoin. Cryptocurrency trading, millennials' newfound interest. Also referred to as the Generation Alphas, this is a group of people who were born precisely when Apple introduced the iPad. This was the emergence of a slew of social media networks. This qualifies them as experts in their use, given they grew up in their presence. Due to their constant exposure to technology, their perspective on digital applications and devices is significantly different than that of the older age. This is why the crypto corporations have opted to focus their efforts on them, ensuring that they receive the appropriate information. Nobody else can use digital assets, blockchain, or cryptocurrency better than this generation can. Millennials versus baby boomers, a distinction in beliefs. One reason millennials outperform their elders in terms of digital investment wisdom is their consistent online presence. Because they are always connected to the internet, they have a greater grasp on digital investment portfolios than the previous generation had. Additionally, it makes it easier for them to adopt digital investment methods as opposed to traditional investment methods. These teenagers have a fantastic concept about bullish cryptocurrency patterns, whereas the mainstream stock market trends bore them to sleep. This is why people choose to invest their money on Bitcoin, meme coins, NFTs, DeFi, and Ethereum rather than on more traditional stocks. Millionaires of the millennial generation. According to a CNBC survey, the new generation of millennial millionaires invest the majority of their fortune in digital assets. Around 25% of earned wealth is reinvested in cryptocurrencies. They have preferences when it comes to the type of cryptocurrency in which they wish to invest. Generally, they aim for a diversified portfolio, ensuring that they own a small amount of each currency to hedge their bets. The millennial generation's interest in this entire system has grown to the point that around 1/3 of them are now involved in crypto trading and mining. Their preferred asset class is NFTs. Trusting intangible assets. The generational divide between Gen X and Gen Z is the primary explanation for the disparity in investment preferences between the two. The elder generation, sometimes known as boomers, does not believe strongly in intangible assets. They are hesitant to invest in something they cannot hold or see. This causes individuals to gravitate towards physical assets, which they continue to invest in. On the other hand, the younger generation is aware of the internet's potential. It is obvious that digital currency exists, and people can trust it blindly. Research capabilities and investing ease. Everything is widely accessible and within reach of young investors thanks to the internet. They rely on their own research and not on professional judgments. They know just which digital currency to invest in at any given time, according to their research ability and current knowledge of industry trends. They can assess the investor's attitude and purchase assets that will maximize their return. Conclusion: the internet generation is light years ahead of the previous generation. It is capable of adapting to new circumstances and ways of living over time. Half of New Age investors have become millions merely by recognizing that the new world is all digital. As everything moves to screens, the time for investing in tangible assets has passed. The level of security provided by the blockchain model is another factor that draws this new generation of investors. Simultaneously, the ever-changing market channels their sense of adventure, compelling them to take a more active role in it. "15 major businesses that accept cryptocurrencies as payment." Investing in cryptocurrency is a relatively new trend. And why would you not? After all, the digital token or cryptocurrency is transforming the way consumers pay for goods and services. Cryptocurrency is not like fiat money or credit cards, which people frequently use in stores or when making online purchases. This groundbreaking payment system is solely based on digital platforms, or blockchains. And, perhaps most excitingly, even when a crypto coin is not in use, it continues to be productive. The longer a person keeps a token in his or her cryptocurrency wallet, the more money they earn. Yes, it is risky too. However, the good news is that consumers pay nearly nothing if they earn crypto first and then spend it. Due to its numerous benefits, cryptocurrency is attracting the attention of businesses worldwide. Brands and business sectors have all begun to embrace the crypto payment culture. Businesses now accept cryptocurrencies as a form of payment from clients. The following are some of the well-known companies that are leading this race. 1. Microsoft. Microsoft, one of the world's largest software firms, is one of the most well-known companies accepting crypto tokens as payment. Not only that, Microsoft is the first household name to have catalyzed the cryptocurrency movement in contemporary payment culture. Although the IT giant prefers Bitcoin as a payment method, it also accepts other digital tokens. Apart from that, Microsoft has developed a comparable framework for creating Bitcoin-like tokens. 2. Shopify. The world's largest e-commerce site is also close to this new culture of cryptocurrency usage in the payment system. Shopify made waves in 2015 when it announced that it would begin accepting Bitcoin payments. The e-commerce site accepts payments from a variety of different payment providers. Apart from Bitcoin, the e-commerce company also takes payments in the form of Ethereum and Litecoin. 3. Subway. Satisfy your craving for a Subway sandwich for one digital token, as the brand is now accepting it. Even though the Subway was one of the first companies to accept cryptocurrency payments in 2013, just a few digital currencies were accepted. However, the brand has recently agreed to accept this new payment method in multiples. 4. Overstock. Following Shopify, Overstock became the next well-known brand to accept cryptocurrency as payment from customers in 2017. The company accepts a variety of digital currencies, including Bitcoin, Dash, Litecoin, and Ethereum. The corporation has its own blockchain network, which converts the coin and circulates it. 5. Expedia. Expedia, the world's largest travel operator, now allows cryptocurrency transactions. Travelers may book a hotel and conduct any transaction using the company's new payment approach, which is open to everybody. However, cryptocurrency can be used as payment in only accepted countries. Notably, not all countries accept Bitcoin or any other digital currency as a form of payment. 6. Pizza Hut. When it comes to a food business where a person may use cryptocurrency to satiate their craving for a nice pizza slice, Pizza Hut is unquestionably the best. The company is one of the newest additions to the list of prominent corporations that have just begun accepting cryptocurrency. It all started in November 2020, when the company recognized the potential of this emerging payment trend and decided to dive in. 7. PayPal. Despite its prominence as a digital payment method, PayPal has expanded into the cryptocurrency space. The explanation for this is self-evident. PayPal has partnered with numerous cryptocurrency payment processors to ensure that users who wish to transact in Bitcoin or other crypto assets may do so without encountering any issues. 8. Apple. Apple, one of the world's most opulent smartphone brands, is also on the verge of adopting this new payment trend. Apple Pay enables users to make payments in Bitcoin, Ethereum, Litecoin, and other cryptocurrencies. Apple Pay's wallet includes a variety of capabilities that enable users to make online payments. 9. Coca-Cola. One of the oldest and largest beverage brands in the world does not wish to disappoint its Bitcoin users. The company collaborates with the Centerpay platform to bring the concept of cryptocurrency payments to life. Thousands of vending machines in New Zealand and Australia now allow users to purchase a beverage in exchange for a cryptocurrency transaction. 10. Twitch. Customers of the world's largest video live streaming service can also pay using Bitcoins. However, the American corporation accepts only Bitcoin and Bitcoin Cash as payment for its services. However, the company temporarily ceased receiving payments in the middle of 2019. However, they were forced to enable it subsequently owing to a consumer request. 11. Burger King. When the stomach grumbles with hunger for burgers, the issue is that there is no currency available to pay Burger King save for cryptocurrency. Not to worry, the brand now takes cryptocurrency as payment. At Burger King, anyone can pay with Bitcoin, Litecoin, Tether, and a variety of other digital assets. Users can exchange currencies on the Burger King website or mobile application. 12. Starbucks. Starbucks began accepting cryptocurrency in 2020 and continues to allow customers to utilize the groundbreaking payment method for coffee enthusiasts. 13. KFC. Additionally, KFC meal aficionados can pay for their order with their preferred cryptocurrency at any KFC location worldwide. However, the brand may or may not take cryptocurrency in every country, as not all countries consider cryptocurrency as a well-regulated or secure means of payment. 14. Visa. Visa, the world's most renowned credit card business, is having difficulty staying away from cryptocurrency transactions. The company enables consumers to conveniently do digital currency transactions using any credit card. However, the organization is continuously working to improve the experience. 15. Tesla. Tesla CEO Elon Musk believes in the potential of cryptocurrency. As a result, the world's wealthiest man now accepts cryptocurrency at his company Tesla. Elon Musk is also active in the cryptocurrency debate. Conclusion. Thus, these are some of the main businesses that accept cryptocurrencies as payment. When you next purchase a product or service from one of the above-mentioned firms, ensure that this new payment mechanism is available for all purchases. Here are some reasons why you might prefer crypto such as Ether or Doge over Bitcoin. While Bitcoin remains the most valued cryptocurrency at the moment, consumers and businesses are increasingly turning to alternative digital tokens for purchases, according to one of the largest cryptocurrency payment processors in the world. Bitcoin adoption as a payment method decreased to 65% in 2021 from 92% in 2020, according to BitPay. Meanwhile, BitPay's biggest buy tokens were altcoins, currencies other than Bitcoin, including the Ethereum token Ether, stablecoins, and meme coins. Ether made up 15% of the total. Stablecoins, whose prices are fixed to fiat currencies such as the dollar, accounted for 13% of the total, while Dogecoin, Shiba Inu, and Litecoin contributed for 3%. Why are altcoins gaining popularity? There are various reasons for the increased use of cryptocurrencies for payment purposes. To begin, the cryptocurrency markets have been extremely volatile since early November. Bitcoin's price increased 60% last year, and despite the volatility, many investors continue to retain the cryptocurrency as a long-term investment rather than trading or spending it. Given the volatility of Bitcoin's price, researchers say stable coins have been viewed as a safer trading option. In terms of meme coins, Tesla CEO Elon Musk has favored Dogecoin over Bitcoin, mostly for environmental concerns, as Dogecoin mining consumes less energy than Bitcoin mining. Musk stated on Friday that Doge can be used to purchase corporate merchandise. What did people do with their cryptocurrency tokens? According to BitPay, many crypto investors spend their tokens on luxury products such as watches, vehicles, boats, jewelry, and even gold, which comes as a surprise given that many consider Bitcoin as the 21st century's gold. BitPay assists businesses in accepting cryptocurrency payments and has done so since 2011, when few businesses accepted digital currencies. The company now claims to conduct over 66,000 cryptocurrency transactions per month. More mainstream corporations, including as PayPal, are entering the crypto payments industry as a fintech and wallet startups. This space is still in its infancy, BitPay CEO Stephen Pear told Bloomberg. A lot of it has to do with our perceptions of time. We are expecting to see extremely significant growth over the next number of years. The price of Dogecoin fluctuates following Elon Musk's announcement that Tesla will accept the cryptocurrency. The billionaire has long been a proponent of the formerly fictitious coin. Dogecoin is once again declining in value following the announcement that Tesla will now accept it as payment. Elon Musk, the CEO of Tesla and a millionaire, revealed on January 14 that Tesla apparel is now available for purchase using Dogecoin. He announced the news for the first time on December 14, 2021, stating that Tesla would watch how things proceed. Dogecoin may now be used to purchase select merchandise, such as the Cyberquad for kids, which costs 12,020 Doge, or about £1,499.80, the Giga Texas belt buckle, which costs 835 Doge, or approximately £104.19, and the Cyber Whistle, which costs 300 Doge, or approximately £37.43. Dogecoin's value increased about 15% in the aftermath of Elon's tweet. However, it erased nearly 6% of its gain on Monday, January 17. This is almost certainly due to investors profitably selling their shares as the coin appreciated. How much is Dogecoin worth? Dogecoin is a meme currency that was inspired by another meme currency. It was developed in response to the Shiba Inu coin, which was created in tribute to the Japanese breed's iconic Doge meme. Billy Marcus and Jackson Palmer founded the open-source currency in December 2013 as a fun alternative to Bitcoin. Unlike Bitcoin, there is no limit to the number of coins that may be mined with Doge. As a result, the number that can be purchased, sold, or exchanged is unlimited. At the moment, the coin is mostly used to tip Reddit and Twitter creators in exchange for high-quality social media content. It is currently available for purchase on all major cryptocurrency exchanges, including Robinhood, Binance, and Kraken. Dogecoin's value was 12 pence at the time of press, up from 10 pence on January 10, but still trailing the 16 pence rise following Musk's tweet about Tesla adopting it for some things. Although trading is down from its all-time high of £0.053 in May 2021, the currency has still gained a huge 1,768.33% in the last year. Given Musk's recent endorsement, whose backing, or lack thereof, has been proven to influence prices, even if only temporarily, Dogecoin may be on the verge of surpassing the coveted $1 threshold. Tesla accepts Dogecoin for what purpose? Elon Musk has been an outspoken proponent of Dogecoin for a long period of time. He earlier stated that Dogecoin may be his preferred cryptocurrency, owing to its very awesome nature. The internet mogul hinted to his plans in May of last year, during a bull run in cryptocurrency. He posted a poll inquiring whether users wanted Tesla to accept Dogecoin. Not long after, another of Musk's businesses, SpaceX, began accepting Dogecoin payments. Tesla has already experimented with accepting cryptocurrencies in exchange for services. The company announced a few months ago that it will begin accepting Bitcoin for car purchases. This was halted 49 days later due to security concerns over Bitcoin mining. Cryptocurrency is an excellent idea on many levels, and we believe it has a bright future, Elon Musk said in a statement. However, this cannot come at the expense of the environment. Dogecoin requires energy to mine, however it uses far less than Bitcoin due to its low value. Musk has stated previously that he is collaborating with Dogecoin developers to increase system transaction efficiency. He has also stated publicly that he is seeking community support for his candidacy. Many of the employees I spoke with on Tesla's production lines or at SpaceX's rocket assembly line own Doge, he told CNBC in October. More consumers are beginning to purchase digital goods using cryptocurrencies other than Bitcoin. Stablecoins are rapidly gaining popularity as a method of cross-border payment. Bitcoin is by far the most well-known cryptocurrency in the world, owing to its existence since 2009 and its role in establishing thousands of popular altcoins such as Ethereum, Litecoin, Dogecoin, and Shiba Inu. According to BitPay Incorporated, one of the largest cryptocurrency payment processors in the world, online consumers and businesses are rapidly beginning to make purchases using digital tokens other than Bitcoin. Bitcoin usage at BitPay-enabled merchants fell to roughly 65% of processed payments last year, down from 92% in 2020, the company told Bloomberg. In 2021, new coins added to BitPay, including as Dogecoin, Shiba Inu, and Litecoin, accounted for 3% of purchases. The adoption of alternative coins has increased in part because more firms have begun to use stablecoins for cross-border payments. Additionally, consumers gravitate for stablecoins, whose value is meant to remain constant as cryptocurrency values decline, as they have been doing since early November. Dogecoins also gained popularity last year, owing to fans such as Tesla CEO Elon Musk, who recently announced that the digital token can be used to purchase the company's items. With Bitcoin's price increasing by 60% last year, amid market instability near the end of 2021, many investors may have also chosen to save the world's largest cryptocurrency rather than spend it. When they did spend their cryptocurrency, many purchased luxury items like as jewelry and watches, as well as automobiles and yachts. BitPay was created in 2011 when just a few businesses accepted digital currencies and today conducts approximately 66,000 transactions each month on average. That is a drop in the financial transaction ocean when compared to worldwide giant Visa, which handled 206 billion transactions in the fiscal year ended June 30, 2021. Now, an increasing number of merchants accept cryptocurrency payments. A rising number of companies, like PayPal, Twitter, and WhatsApp, are entering the crypto payments space as well, demonstrating the market's potential for expansion. ADA increases in value as the Cardano blockchain accepts a metaverse project. Pavia.io is the first metaverse project to start on the Cardano blockchain, with ADA surging 11% in the aftermath of the announcement. Cardano has become the latest blockchain to host a metaverse-focused project, as the metaverse area continues to gain traction. Pavia becomes Cardano's first metaverse project. After a weekend of strong performance, the cryptocurrency market has marginally retreated during the last few hours. Bitcoin has fallen below the $43,000 mark, while Ether has been unable to break beyond the $3,300 barrier. ADA, the Cardano ecosystem's native cryptocurrency, has been climbing over the last 24 hours. Cardano ranks fifth in terms of market capitalization, behind Bitcoin, Ether, Binance Coin, BNB, and Tether, USDT. At the time of publication, ADA was trading at $1.52 per coin. The primary driver of the rally is the launch of the Cardano blockchain's first metaverse project. Pavia.io stated a few hours ago that it has become the first Cardano-based metaverse project. The Pavia team stated that it currently has approximately 100,000 land parcels, each of which is represented by a unique non-fungible token, NFT, with coordinates. The metaverse is a critical component of the cryptocurrency ecosystem that has gained momentum in recent months. ADA exceeds the 50-day EMA. ADA's value has increased by more than 10% in the last 24 hours, outpacing the other major cryptocurrencies. The daily chart of ADA/USD is positive, and the currency may rise higher in the coming hours if the current trend holds. ADA is currently trading at $1.539, slightly higher than its 50-day moving average of $1.3343. For the first time this year, the MACD line has passed the neutral zone. Meanwhile, The RSI of 63 indicates that ADA has exited its oversold level and is on the verge of being overbought if the current momentum continues. If the surge continues, ADA could break through its first significant resistance level at $1.74 in the coming hours. A sustained bullish performance would enable ADA to break through the $2 level for the first time since November 16. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.